My next guest says the key to success for many investors is to keep it simple. And that's not stupid. Adam Bold is here, founder and CEO of the mutual fund store, which has $4.2 billion in assets under management. We'll be spending the entire remaining hour, the last hour of trading with us today. Adam, great of you to be here.
Hey, thanks for having me.
What makes me nervous watching this market, and I hear it over and over again from some people, even those on TV, you can trade and make money. Trading is the only way to do it. You say no way.
No, I don't think so. I think for most people out there, they need to be investors. And unfortunately, we're in a society now where everybody wants everything to happen right now. So, you know, somebody changes their Facebook status, you respond to it. Somebody changes their, sends you a tweet, you respond to it. A text message, you respond to it. Now people look at their 401k account and they go, oh, my 401k has changed its status. It's down $2,500. I better do something about it. And really what they should do is be patient. Investing is one of those things that it takes a while.
Right. There was a study done recently, though, that said that only about a third of people invested through 401k plans had made any changes to their 401k plan, however, since the market downturn started almost a couple of years ago. So does that mean, but maybe do people need to be a little bit more active?
They definitely need to be more proactive. I mean, the reality is it's not enough to have a 401k. You need to make the most of it. And so I think for most, now that doesn't mean look at it every day. But it also means that a couple times a year, you need to reevaluate. Make sure that the funds that you have are still doing what you wanted them to do and are doing in the right proportions. But you also don't want to try and time the day-to-day gyrations of the market.
All right, I love mutual funds, and I covered them for years, and I'm kind of the cheap and easy gal. No pun intended, don't read into that too much, but I like index funds because they're very simple and straightforward, and they're inexpensive. But you like active managers, do you not? Who do you like in this environment?
Well, there are a number of fund managers I like. Let me just give you the concept, and that is that I think this is a stock picker's market. We've had this economic downturn, and there are some companies that have done a really good job of figuring out how to be profitable in this environment. There are others that are not. With an index fund, you own all of those companies, whether they're doing a good job or not. Some of the funds we like, number one, the Kinetics Paradigm Fund, symbol WWNPX. It's a large company growth fund run by Peter Doyle. He's just been an amazing manager. Now, the fund had a bad year last year.
No, amazing, not so much last year, and I cut you off, but it lost more than half its value last year because of a big stake in financials. If you want to bet on financials, why not just buy a sector fund?
But you know what? He really doesn't own financials. He didn't own any of the banks. He owned the stock exchanges. And the stock exchanges went down with the other financials, but they're really not pure play financial companies. They're like the house in a casino. They get to take their little commission off the top.
Well, speaking of commission, that fund's not cheap. It's about 1.66% expense ratio.
Well, let me ask you a question. Does it matter? I say expenses, Vanguard has built their fortunes on the fact that you need to have funds that are cheap. I contend there are some things in life that are worth paying more for.
I like the consistency of knowing that is the one thing I can always count on. How much is it going to cost me year in and year out when the performance is not there?
Dagan, but I also say that when you buy an index fund, you're accepting mediocrity right off the bat. You'll never do worse in the market, but you're never going to do better than the market.
But I won't super stink. You like bonds, though, here?
I do. One of the funds I like is the Westcore Plus Bond Fund, symbol WTIBX. This is a fund, it's a corporate bond fund, but even last year when the credit markets froze up, the fund was only down 1.9%. Historically, it's returned about 6% a year. I think that's what you can expect from this point forward, and they've done a great job.
That's where more of the asset flows have been going into your bond funds rather than the equity funds.
Yeah, but people are doing that. People are looking at the past record. We want to look forward, not back.
Okay. You're with us the whole hour, so we can get into it later. But moving back to the unemployment rate, hitting a 26-year high in August. But don't tell Wall Street the market's in the green. Why are stocks up today? Robert Gray, fill me in.
Well, Dagan, we saw people taking, we sold off earlier in the week. People were anticipating maybe a bad number, taking some chips off the table, if you will. And we saw that yesterday. We talked about the big bets for the big market drop this month sort of being taken off the table. And we're seeing that play out today in today's trading. We're seeing stocks going higher here. You're seeing a smaller number than expected. Jobs lost, even if you saw the household survey moving higher. And as our own Mark Lieberman pointing out, more people are going back looking for work. So that made the pool larger, therefore making, that 9.7% actually had somewhat of a silver lining in there.
Sandra Smith, did you find any other silver linings in the news today?
Well, certainly the declining pace of job losses, Dagan, is pretty big for this market. I was down on the trading floor Monday and Tuesday at the New York Stock Exchange, and these traders were already anticipating, some bad news on Friday with the jobs report. And, a lot of this was priced into the market. We already had a 186-point single-day drop in the Dow. So a lot of those folks that wanted to see a big sell-off already got that. And we started the week with some pretty solid economic news, including pending home sales data showing some improvement. So there's been some good economic reports, Dagan, pointing to some stability in the market right now.
Adam, what are you watching?
I love the fact that there's a lot of skepticism out there. I hear, commentators going, oh, we have to have a correction. I don't know, where in the rule book does it say you have to have a correction? Yes, we've come a lot from the bottom, but a year ago today, the Dow was at 11,500. I think we've got a lot of upside left in this market.
Even in small caps? Because small caps have outperformed off the bottom.
But they also did worse on the way down. I think that there's a lot of opportunity, both in small caps and large caps. The things that scare me the most are things like China and Brazil and the markets that have really run up a lot.
Okay. I'm personally scared of Treasury yields, but that's a story for another segment. The closing bell rings in less than 50 minutes. We're going to ask our traders what is moving today in these markets in our floor show or listening to right now. Adam Bold.
Well, I'm waiting for the Beatles catalog too. It's going to be fantastic.
It's a big deal.
It is a big deal. So what is everybody watching? The most common question I get on my radio show now are people are like scared of inflation. And I am not scared of inflation right now. Really, there's people, the assumption is that because the government is printing all this money, that will quid pro quo lead to high inflation. The difference this time is that the money supply is increasing, but the multiplier isn't. The banks are hoarding this cash, and nobody has any pricing power. I mean, sure, Bloomingdale's is busy, but everything's on sale. The car dealers are busy, but you got to give them $4,500 extra for your clunker to get people to come in. So I just don't think there's going to be inflation for the foreseeable future.
Airlines traffic up slightly in August. JetBlue's was flat, and Delta, American, United all had lower traffic. Does it pay to be a smaller airline in this environment? And how are the low-cost carriers keeping up with traffic? Sandra, to you first. I know that we were talking about it in the green room about make sense of this for me. I have an idea, but I want to hear what you have to say.
Well, yeah, I think it comes down to customer service with a lot of these airlines of late. Yes, a lot of them have raised their baggage fees or actually implemented baggage fees. Southwest has been reluctant to do that. But it really comes down to, Dagan, cutting down the capacity. Southwest cut their capacity, and they've been filling seats. They've been taking planes off that are full. And if you can manage to do that, it's just like the retailers managing inventories. Same with the airlines. Southwest has been able to do that, and that's why they're winning here.
Robert Gray, what do you say?
Well,
Southwest is not charging for the first check bag.
They're not. And by the way, I just saw Regional Jet Holdings, Republic Airways rather, it's going to up there from 15 to 20 bucks for the first check bag. So, not loving that from a consumer standpoint. But I've flown Delta, US Air, and Continental all this summer, and some of them more than once and on various legs, Dagan. And almost all the planes have been jam-packed full. It's because everyone is taking capacity out of the sky. Delta, as a matter of fact, their traffic was down, but their capacity was down more last month. If you take a close look at the numbers here, and they've all made plans this fall. They announced a couple of months ago they were going to be taking seats out of the sky, so they are keeping it demand artificially there. The problem for me as a consumer is, and we've talked about this on the show, Dagan, just raise the price of the ticket. Don't nickel and dime with these charging for this and that, because that is what begins to turn people off. Conversely, what it can do is make you loyal, though, and maybe even more loyal in a perverted way, because if you have a certain status, with miles within an airline, they will waive those fees for you.
Fix the airlines for me, Adam, in 30 seconds, please.
You know what? The people have to be nicer. I'll tell you, Southwest, they get you on the plane, they get you off the plane, they make it easy, and they're nice. A lot of those other airlines, from the gate people down to the flight attendant, they're not that nice. I don't want to fly on them.
And they're becoming pet friendly, and they've smartened up. Southwest, you can fly with a dog now. You have to pay, $75. JetBlue, you can even buy pet carriers on JetBlue's website. So
can you buy a dog?
No, not yet, but that's an idea, actually. That's a hot area, pet care. Hey, Adam, thank you for that. Adam, some final words of wisdom, your bottom line.
You know what? I think what's going to give us the next leg up in this market is the retail investor that's going to go, oh, I guess this market is going up. All this money that's on the sidelines is going to start coming back into the market.
We've had 24 weeks in a row of inflows.
But you know
into
what?
mutual
Until
funds.
recently, the general public hasn't believed it. I get people calling my radio show and they're like, all right, I guess it is time to put my money back in. And there's so much of that money, it's going to push us up.
Okay, Adam Bold, thank you. It was great spending an entire hour with you.